All right. Evening, everyone. This is Live Market Observation, Volume 67. As you guys make your way on, make sure that you like and share the video from whatever platform that you're tuned in from. If you're tuning in from Facebook, like and share the video, follow the TeamAlliance Facebook page, and then turn on the little bell. There's a bell on the page. Turn it on. If you're tuned in from YouTube, be sure to subscribe to the channel. If you're not already, of course, like and share the video. And also turn on the bell notifications. And if you're tuning in from Twitter, be sure to like and share and then retweet on your timeline. And if you're not a member already of the public TeamAlliance Facebook group, be sure to join that as well. Getting into the group will ensure that you always get a notification, because when I post in the Facebook group, notifications always go through, regardless. I don't know what it is about Facebook, but you'll always get it that way if you don't receive a notification from any of the other platforms. All right. So we're going to do some live observation. This is the NADEX platform. This platform allows us to capitalize on our understanding of market movement. Of course, on NADEX, we're trading derivatives. The one specifically that we trade is what's called binary options. And more specifically, we trade 5-minute binary options here on NADEX. This platform makes it possible for us to capitalize on our actual understanding of how the market moves. What most people find difficult about trading is being consistent as far as profits go. Many people find themselves, making money and then losing it, or winning trades for a period of time and then they will lose, and they really don't fully understand why they're losing, because they're, from their understanding, using the same strategy or the same way of entering into trades. And the way that you enter into a trade is less important than when you're entering a trade. It doesn't matter that your strategy or your signal is there. In other words, it doesn't matter that your strategy is saying that now, is a good trade setting up. If your trade is setting up at the wrong time, you'll lose and you won't know why you lost. What do I mean by the wrong time? Well, the market has different types of movement and behaviors, even when trades set up the same way. This is going to be a very good live stream, because what I tend to do in these is to actually train. I don't mean to do it intentionally, but I end up training you, especially if you're not in training. You're going to learn something today. A lot of people still try to figure out why they keep losing. They'll win for a period of time and then out of nowhere they'll lose, and they're like, damn, I don't know why I lost that one. Mind you, the same trade setup. So I guess it does, it's disturbing that you're using the same setup over and over, but the results are not the same. So you really have to change the way that you are thinking about trading, and you have to understand the market before you start to trade. See, this is one of the major issues that a lot of folks have. No one ever told you that. This is, for many of you, if you're tuned into this now and you're listening to this, whether it's the replay or you're here now, you never heard no one tell you that you need to understand how the market moves first. Most people that are providing some type of service, they're going to tell you which indicators to put on your chart. They're going to tell you how to use some price action or some candlestick patterns. They're using all these different ways of trying to teach you something. But none of that stuff makes sense if you don't understand movement. The market moves. So the question or the questions that you should be asking should be related to how the market's moving, not what candlestick patterns are present or, what trade will set up from some type of pattern that you see. That's secondary, because that's leaning more into trades setting up. What good is your trade setting up if you don't know what environment the movement of the market is in? In other words, is the market in a faster moving environment or a slower one? You didn't know that there was a difference? There's a difference. Sometimes the market appears to be fast and it's not. Sometimes the market appears to be slow and it's not. There's an abundance of moves or movements in between. So it's not just fast, slow, up, down. You have behavior. How is it moving up? How is it moving down? Just like if someone says, oh, the market's moving lower. What does that mean? The market is always moving lower. The market is always moving higher. The question becomes, how is it moving lower or higher? How is it doing it? It's just like when people refer to trends. Uptrend, downtrend. What does that mean? You could have down moves in an uptrend, and you can have up moves in a downtrend. But what do the moves mean? See? I'm telling you, listen, if folks out there pay more attention to what I'm saying when I do these lives, your perspective will start to change, and you'll start to learn how to actually stop losing when you trade, because you'll begin to realize that you need to stop trading. Like, wait, I'm taking these trades and I don't even really know what the market's doing first. Exactly. Because the trade that sets up is not important if you don't understand the movement. It's just like if I say to you, market is slow, but how is it moving? You should be able to answer that. You should be able to tell me, yeah, it's slow, but the movement is still unstable. Now we're getting somewhere. You can have a slow environment in the market, still has unstable movement in the slow environment. Well, what does that look like? It's called wicks. What do you think a wick on a candle is? A wick represents reversal energy. Reversal energy manifests as wicks. Mind you, reversal energy and wicks, that's one manifestation of reversal energy. Reversal energy is also when the market just turns around and goes the other way. But when it does that during the candle, it creates the wick. When it does that during stable movement, it just becomes a color change. This is good stuff. Pay attention. See, a lot of the things that you hear me talk about and speak on, I explain. So I don't just leave you hanging by talking about stuff and then, hey, this is what it is. You go ahead and figure it out. I'm actually teaching you how to understand the movement in the markets first. See, because trading these binaries is simple. It don't take a rocket scientist to trade. It's very easy to trade. Just select buy or sell. It's either going to go up or it's going to go down, or it may not go anywhere. But if the market is in position already relative to the option that you're trading, you need to know what the behavior is so you'll know what it's going to do. Well, Mark, are you predicting? No. You don't have to predict when you see. You don't need to predict anything when you can actually see what it's doing already. You see the difference? So this is how important understanding the movement is. If you actually understand the movement, you'll understand why it's doing what it's doing. It's just like if I say, all right, take a look at this right now and look at these candles. And you see that all these candles are inside of this green box. Why are they all in the box? Why? How come none of these have moved outside of the box yet? See, if I ask you that question, you should be able to answer that question. But if your response is, I'm not sure, I don't know, that's just what the market decided to do right now. Well, the market decides to do a lot of things. But the question is, why is it doing it now? See, that's the question. So you see how I'm presenting you with the right questions to ask. This is when you look at the market. When you're observing and you're looking, you need to ask these questions. And you'll make sure that you'll like the video on whatever platform that you're on. But you need to ask these questions, because what happens is if you don't ask the right questions, you won't do the right things. If you ask trade questions, you'll trade. If you ask market questions, you'll understand why you should or should not trade. See the difference? There's a difference. So as you begin to observe the market more and you see how the behavior in the market switches up, it will change what it's doing. It will continue what it's doing. It does a lot of different things kind of at the same time, but not really. The more that you begin to observe and understand, the less of a puzzle that it seems to be. Because if you don't observe the market with understanding of the movement, it'll just be a big ass puzzle to you. Like, damn, I don't know where none of these pieces go. But through observation, you gain understanding of movement. This is why I tell you to just look. Just look at what the market is doing. Look at what it does. Look at how it does it. Let's do it now. Let's do it right now. So and let me just duplicate this box right here so I can bring it over. Just by looking, I can see that there were several instances of the smaller candles that we kind of see in this box. These are smaller candles, relatively speaking, to some of the other candles that you see elsewhere on the chart. There's another area here where there's smaller candles. Look at this. You see this? So visually, this is what I do. I look and see how many instances of the smaller candles that there have been. And then I look to see what it does after, right? And I look to see the next time it does it again. So I want to see multiple instances of something. In this case, it's the smaller candles. I want to see multiple instances of the smaller candles in this example that I'm using. So this is more so the horizontal perspective. So there's an instance there. There was a brief instance here as well, right there. So that quick, just by looking at the chart, I can see that there have been multiple instances of smaller candle activity. Just in this area here, there's 4 different instances. So where we are now is not the first one. Pay attention. So this is not the first time that has happened. That means this behavior is there already. It's already here. And if I want to, I can use this right here as the first instance of it. Because back here, this looks like there was, larger candle activity and more movement. But you basically had the first instance of it here. You had another little instance of it here. Another one here. And then where we are now. So you see how quickly I was able to just look and see that the market has an existing behavior present already. It's called range. It's called range. So now when I see these candles reoccur, I know that the market did this already in a previous instance. And if you look back, you'll see that it probably was for a shorter amount of time, which it was. Just like this. You had roughly about 4 candles in here that were small. 1, 2, 3, 4. So really 5. This one I won't count. I'll just say that that's a larger one. Let me see what that one is. That one's 5. Yeah, that one is 5 micro pips. But all of these other candles, all 5 of these candles are smaller than this one. So I know that these candles are less than 5 micro pips. How do I know that? Because this is 5 micro pips. So these are smaller than that. So I know already that these are smaller than this one. Just by looking. Come over here, I could do the same thing. I take this one. That's a larger one. This one is 5. So if I'm looking at this blue one, let me just put the box in this area. If I'm looking at this blue one, I can look quick and see if any of the other candles are smaller than this. And these candles are bigger, so I move over here. And I come over here. And I see 1, 2, 3. All 3 of these. And no, that one looks like it's bigger. But you got 3 here. So I move this over. So now that's another instance. And it's fewer candles. So now what I'm looking for is more candles of the smaller ones. So what I'm doing is I'm breaking down the instances that I'm seeing of smaller candles. And then I look at how many of them. So when I start seeing more smaller candles, I know that the market is beginning to dominate with smaller candles. So you see how just a visual exercise can quickly allow you to know if the behavior is present already and if it's progressing. In other words, is the smaller candle activity starting to dominate? Or is the market still doing something else that's preventing it from dominating? You see what I'm saying? You can't do that unless you're able to look and observe. And by observing, you'll know. Now, mind you, all I'm doing is a visual exercise, but this is more powerful than trying to find a trade. Because this is going to allow me to see when the market dominates with the smaller candles. And why is that important? Because I know that if the market dominates with smaller candles, it creates range. And range creates clusters of candles that are respecting some type of a barrier. And the next thing you know, the range and the cluster of candles begin to respect the barrier, and then a trade comes. But I can't see that if I'm not seeing the existence of the dominance yet. Am I making sense? So I can just look and see, all right, it's not dominant yet, but I do see instances of it. Here's an instance. Here's an instance. Here was an instance, right? Here was an instance back here. So the market is working its way up to dominance until there's dominance. And I know I don't want to do anything until there's dominance. So I'm not even thinking about trades. You see how I'm shifting your focus away from trades? Because the trade is less important than having the dominance of the behavior that you need before the trade comes. When the market has range and the candles start to cluster and a barrier is formed, and that's what dominates overall in the market, and then a trade comes, that trade wins. No questions. There's no question about it. Well, Mark, how do you know the trade wins? The trade's going to win because we know the outcome of the movement. We already know what the market's doing. That's the dominant movement. There's another terminology that you'll hear me use for it. It's called the layers of stability. So basically, you're recognizing when the market has stability on every layer. Why is that important? Because when you have the layers all present, there's no question about what it's doing. You know what it's doing already. So when that trade sets up at that time, you know the outcome of the trade because you know the outcome of the market's movement. That's how this works. And that's why you'll see me so consistent in the trades that I take. So I'm actually teaching the process, not a strategy. This is the difference. Well, Mark, I just need a good strategy and I'll be on my way. Well, you ain't gonna be on your way to the bank. You're not headed there if you got a strategy, and that's all you're relying on. So there's less importance given to the strategy or the trades setting up. I don't care about the trade yet. I need to know that the market is dominant with its behavior. Why is that so important? Because whatever the dominant behavior is what the market is doing now. Whoa. Same reason that you'll lose a trade that you thought would have won. You're like, man, I don't know what the market just did this out of nowhere. It wasn't out of nowhere. It was doing that already. You just didn't see it. You were so focused on the trade setting up, you didn't know that that behavior was already present in the market. And you got slapped. That's what happened. That's why you lost. You didn't lose because the market tricked you. You lost because you don't understand the market, period. And this is why, see, this is another reason why I teach you patience. Why do you think I focus on mindset first? Because if you don't have the right mindset, you won't develop patience that you need to deal with the market. Because the market is not playing with you. The market is not playing games at all. It does what it does. It has its behavior. You either understand it or you don't. If you don't understand it, you'll focus on trades, you'll win some, and then you'll lose some. And you won't know why. You don't even know why you're winning. You think that you know. This is the funny part. You think that you know why you're winning. Your answer to why you're winning is, well, because this is an 85% winning strategy. That's not why you're winning. That's just how often it doesn't lose based on a certain number of trades that were taken. If 100 trades were taken and 85 won and 15 lost, that's where that 85% came from. But what's to stop the market from having an existing behavior that you're unaware of and you losing multiple trades back to back? What's stopping that from happening? You think you automatically going to win 8 out of 10 and the first 8 win? This is another misconception. People think, all right, well, you know, I'll win 8 and then I'll lose 2. What makes you think it's going to be in that order? What if you win 1, then lose 1, win another 1, lose 1, and then win 6? What if it works out like that? Or what if you lose 3 back to back? Then what? So you see, the win rate doesn't even mean anything. And this is why, again, you cannot rely on the strategy. So stop focusing so much on trades and learn how to turn your attention to what the market's actually doing and being able to interpret that information and understand. And I talk about it all. See, just like how I'll make reference to something like continuation. Just like right now, you got all blue candles going higher, right? This is continuation movement. For the purpose of vertical stability, which I also teach people to see, there's not enough momentum here for this to mean something yet. Whoa. But Mark, all those candles are going up. Could you have known all of this would just keep going up like this beforehand? Did you know that was going to happen? No. Did you know that these 3 candles here were going to be red ones? No. So you can't predict any of this. You didn't know that this was going to happen. But being able to know that, well, these are blue candles, and I know that there's not enough momentum to actually turn this into anything that I could anticipate taking place. See, now there would be a difference if you had 3 out of these candles all pushing up through multiple strikes. If you had so much momentum that these candles were long and all with continuation movement, meaning that they were all long and blue. See, what would happen is it wouldn't even look like this anymore. You wouldn't even see the candles in the box. The one candle would be moving through the box, probably two boxes. Why is that important? Because if it's moving through the box, then that means that that continuation movement has enough momentum to propel the market above or below the strike. Why is that important? Because that's how you trade. These are binaries. So if you know that you'll win the trade by the market remaining on the other side of the strike, then when the market has that behavior present, that's going to be your trade when it sets up. But you don't focus on that trade setting up. You focus on that behavior being present first. Look at what I'm telling you. Listen to what I'm telling you. Like this information is crazy. Every time I talk about it and I go through this, I'm like, do you ever realize what I'm teaching you? Teaching you how to understand the market. And you don't understand the value of that yet until you start consistently winning your trades. Then you realize, like, oh shit, this is crazy. I can get on here and I can recognize when the market has stability either vertically or horizontally. Either one, I can recognize it. And when I see it, and then my trade comes, that's my trade. And in fact, that's the only time I see my trade, because I'm not looking for the trade. I'm not looking for the trade. Crazy. There you go. Patience and discipline removes all trickery from the market. We wait for the process to set up. No problem. So just the fact that you're taking the time to listen to when I do these lives, and it's like I'm kind of introducing a lot of you to a new understanding, and one that will actually allow you to develop skill. Like you'll actually be able to develop skill in the market, and then that will change your trade results. It's going to change the outcome of your trading. Why is that important? Well, because if you don't ever take enough time to actually learn the market, you'll never know the market, and you'll just be trading, winning and losing. And you'll just be in that cycle. You see, and you don't want to do that because you can remain in that cycle forever. There are people like that now. Been trading for years, ain't make no money yet. Still buying strategies, still subscribing to signals, still trying different platforms, just throwing good money after bad. And like I said at the beginning of this, no one ever told you that you need to understand the market first. I'm not sure what, people are saying to you when you're out there, buying all of this stuff. I don't know what folks is telling you. I have no idea. But what I do know is that no one is telling you that you need to understand how the market moves. Nobody's saying that. Because if you knew that, you would be doing that already. You would already be doing it. Yeah, hang on a second. All right. It is a scary cycle. It's very scary. And like I said, like, you got to understand, like the market ain't going nowhere. So the market going to be here forever. Whether, like, regardless of what platform you're using or whatever the case may be, the market is always going to be around. But what's not going to be around necessarily is you. Like, if you don't figure out how to take information that the market gives you, because you got to understand that the market is giving you information. Like, what do you think a price chart is? People use indicators and all this other stuff, but you don't need no indicators. These price candles alone give you basically all the information that you need. Like, literally, I'm not even exaggerating. These candles tell you everything that you need to know about the market. These candles tell you what the behavior is. They tell you whether the movement is stable or not. They tell you how fast the market's moving. They tell you how slow the market's moving. They tell you if there's continuation of movement. They tell you if there's momentum. They tell you if there's no momentum. Huh? Everything I talk about comes from looking at these candles. That's how powerful the market is. That you can look at candles and learn how to understand behavior from candles. Just looking at candles, you like understand what I'm teaching you. You see strike prices, right? These are binaries that we're looking at. The box represents the strikes, top and bottom. So if I put the box here, for example, I put the box right here. This is showing me this top strike and this bottom strike. So I'm seeing that the market has candles in and out the box. I'm seeing right now the market has candles touching the top of the box. And the candles are on both sides of the box. Nothing to do. Look at how quick I did that. Instead of doing other shit that don't make sense. Trying to figure out, all right, is this going to make a move down here and go lower? Is this going to test this support down here? Let me draw some trend lines. These are binaries. Just wait for the market to give you stability. Because once you have stability, then you know the outcome of the movement. In other words, once the market is stable, you'll know what the candles will do. Notice I didn't say you'll know what direction they'll move in, because that's a secondary part. You need to know what the behavior of the movement is first. Then the direction plays its part. It's just like continuation. If continuation is present, the candle can move up or down. It doesn't have to just move up. It can move down too. Because you can have continuation and have reversal energy that changes the direction. But it changes the direction, but doesn't change the behavior. Whoa. What do I mean by that? You ever seen a long candle going up and then a long candle coming down and they both long as hell? What is that telling you? There's behavior present. That continuation movement is there, but there's also reversal energy. That's why it switched direction. It switched direction, but didn't switch behavior. Again, this is what the candles tell you. The candles tell you what the market's doing. So that's why I use these tools. I take a simple tool like a box. I just take the box and just move the box and keep moving it along. That way I know what the candles are doing. If I'm looking for horizontal, are the candles staying in the box? Yeah, they're starting to stay in the box. All right, how big are the candles? And no, they're too big still. All right, are they getting smaller? Yeah, they're starting to get smaller. How many instances of smaller candles are there? It's not enough yet. It's not dominance. Look at how I'm going through what the market is doing. We do this in real time. So the easier that it becomes for you to do that, the easier you'll find it for trades that are going to win to come your way. Because you'll only see trades at that time. That's the difference. It's just like someone that doesn't understand the market. They see trades everywhere. Oh, man, I could have won that one. Damn, did you see that trade? That was a good trade, man. I could have won that one. I wish I was in that. But you don't even know what the market is actually doing. You judging based on the trade. You judging based on if the trade won or not. What's giving you the confidence to be in a trade? Mm-hmm. See? Got to ask the right questions. It's crazy. People think it's the platform, not them, so they go look for a different platform instead of dealing with themselves. Facts. Sure do. Can't tell you how many people have told me, oh, I'm going to go and, go back to Forex. I don't really understand NADEX too well. The market's the same on Forex that it is in NADEX. You think it's a different market? The markets that we're using in NADEX is the Forex market. So what do you mean you're going to Forex? If you're on NADEX, you're already on Forex. That's how you know that people don't understand. Oh, I'm going to go back to Forex. You can't even accomplish the same thing just trading traditional Forex that you can accomplish trading these binaries. It's not even close. Can't scale up the same way. Are you kidding? It's not even close. They make you sign up $199 a month just to stay in the group. Wow. It's crazy. Mm. How true is this? We literally only need to see the price. That's all we look at. We don't need no indicators. A defense, then he simply checks down and easily calls audibles when necessary. Yep. Yep. Exactly. Because the audibles are on the spot. Market is the only indicator you need when you understand its movements. No lagging either. We care about what's happening in the environment now. Bingo. And look at how well we identify what environment we're in. There's people that don't even understand that there's a difference inside of a slow or fast environment. They just look at stuff as fast or slow. Well, market's moving fast. It's volatile. Well, the market also has instability when it's slow too. The same way that the market has stability when it's fast. This is why when I did vertical for the first time, people were so confused. They didn't understand. They were like, wait, you're trading fast? It has nothing to do with fast. Stability presents itself whether the market is slow or fast. Why would it not? Right. This is the closest we got to an indicator. That the little green box. And all it is a toolbox. That's all it is. I hate allergies. Damn, man. I used to get real bad allergies as a kid. And I thought I was doing all right, but I feel it. Well, this pollen out here is starting to bother me a little bit. Messing with my throat. Yep. So yeah, like it's very it's very powerful the way that we do this. And as much as people want to have, some magical strategy to use, like all I need is a good strategy. All I need is a good strategy. All I need is a good indicator. No, it doesn't exist. Because what you're calling a good strategy is just a temporary way of entering based on a temporary amount of time, or not even, it's based on a limited amount of time that the strategy was tested for. Take that same strategy and apply it in different environments. Apply it with different types of behavior present, and you won't see the same results. And then you'll start blaming the strategy. So again, it doesn't mean anything. Your way of entering into trades doesn't mean anything if it's not backed up by an understanding of why you're entering into the trade. So it can't just be that. This looks like a good trade setup. It can't just be the trade setup. Why are you considering taking that trade now? What type of movement is present in the market that can make that trade lose? $1 million question right there. You start asking the right questions, you'll change your results. Losing and not understanding why. Trust me when I tell you, it's better for you to utilize a blueprint for what actually works in the market instead of trying to look for some strategy to use in the market. What would you rather have? See, understanding of the market is that's the value. That's the bag. Not having it is how you lose your bag. Not having it is how you never get to the bag. Yep. Yes, it does. Behavior does outrank everything. If you notice, in 301, you're taught 3 phases. Out of all 3 phases, which is the most important one? I'll let you respond to that. Out of the 3 phases, which one's the most important one? And then we'll break that down. Here we go. Phase 2. Think about it. What holds the 2 opposite ends together? The middle. When you look at phase 1 is the simplest part of the process. It's recognizing how fast the market's moving. And notice how for either perspective, doesn't matter whether it's horizontal or vertical, for either perspective, you need to know what the environment is. Once you recognize the environment, then you move to phase 2. Phase 2 is the most important part because that's where stability manifests. Think about it. For horizontal, phase 2 represents move and hold. And then we use all of the layers of that to know in horizontal and in vertical that the market is stable. How do we know in horizontal? It's in a range. What environment does a range fall in? Slow. What happens after it ranges? What does it start doing? It starts to cluster. Why? Because it's respecting barriers. The range is respecting barrier. So the candles cluster together. How does it manifest for vertical? Momentum. See, in vertical, the environment that we want to be in is faster. When the market is moving faster, what would force the market to continue to move? Momentum. So what creates the continuation? And what is continuation? Continuation is when the movement holds. It goes somewhere. It goes and it holds. Momentum is what forces that to take place. it continues in the same direction it's in already. Long candle, same color, moving through the strikes. That's vertical. Long candles, same color. What does same color represent? Continuation. What do you need for that to happen? Momentum. That's phase 2 right there. Everything I just broke down is just in phase 2 alone. And you don't get there without having phase 1 present. So after you know what environment you're in, now you have to get stability. So why am I saying that it's the most important phase? Well, because what good is being in phase 3, applying parameters to get into a trade if you don't have stability present? Uh-oh. This is why I said phase 2 is the most important. You can know that the market is fast or slow and then try to take a trade. Check this out. Let's say that you identify, all right, market's slow. Now I'm going to apply parameters, try to get into a trade. Is that smart? If you still don't know what the actual behavior is? Can you not have instability in a slow market? Of course you can. So what good is the slow market without knowing the behavior present? Let's talk about vertical now. That was horizontal. Let's talk about vertical. Market's fast. Yeah, but is there momentum in that speed? In other words, is it just fast and that's kind of it? Or is there continuation of the movement? See, the speed is only good for us when the movement continues, because you can have the market move fast back and forth. Again, unstable. Can you have unstable movement in speed? Yes. Y'all have seen it many times. How many times you seen long candles with a long ass wick? What do you think that is? The movement ain't stable yet. If there's a wick on it, that means there's no continuation. If there's no continuation, that means there's no momentum yet. Again, where are we at? Phase 2, behavior. So what if I'm out here trying to get into a trade just because the market's fast? Or I'm trying to get into a trade just because the market is slow? That puts me right there where everybody else is that tries to do what I'm doing, that tries to do what I'm teaching you guys to do, and they fuck it up. Mark, I tried your approach. And when I entered, the market was slow, but then it just suddenly reversed on me. Yeah, because you're not in phase 2 at all, butterball. You ain't in phase 2. You thought you had it because the market was slow? Same way you thought you had it because the market was fast. You thought that that's all I was doing, huh? Nope. Now you see why I'm saying phase 2 is the most important one? Because if you attempt to do anything without it, you're going to fuck up. And I don't think I've ever talked about it that way, but I needed to talk about that because you need to understand to what degree you have to know the movement. You got to understand the movement of the market at the time. I've been in trades that I should not have gotten into being transparent, but behavior protecting me because I was too hasty. He says, I'm not recommending that. I'm just saying. Mm-hmm. And ultimately, yes, of course. You got to have all three to be in a trade. But again, which out of all three, which is the most important one? It's two. It's two, because you have to know that you have stability in your environment. That makes sense, though. Would you say that's what happened with me, Mark? I'm the one who sent you that no fill example today in the chat. I understand why I should have stayed out. Oh, yeah, the other one that you had sent. Wait, let me see if we talking about the same one. Romario, right? Yeah, I got that. I saw it. And you realized it when you had messaged me back. You understood because you said it. You said that you realized that after reviewing it, it made no sense to click in because there was no pricing, which is exactly what I was saying about if you already see that there's no pricing and you see what your distance is. So in other words, let's say that you're at 7 micropips away from the strike already in the last minute. There ain't gonna be no pricing. And there shouldn't be pricing. If there is pricing with 7 MP away, there's a reason that there's pricing. And you don't want to find out why. Market is telling you something's gonna happen. Because if the market is stable, you won't see pricing with that much distance. So it's kind of like the market is out of position if it's already 7 MP away. Now, if it's 4 MP away, and then you see 5 and then 6, just as an example, 4 or 5 is within range. The more stable the movement is, the shorter the amount of time is that you'll see pricing for, but you may see pricing. As a matter of fact, if you have 4 MP away, more than likely you will see pricing of some type. But even if you don't have pricing, but you're 4 MP away and you get 5, 6, I'm clicking in because I know that it's within range. And I'm not saying within a range. I'm saying it's within range of the strike. The distance away from the strike is in range. 4 or 5 is not 7 away. 4 or 5 is within range. Am I making sense? I know that that's an appropriate distance for there to be pricing, or if there's not pricing, I'm going to click in regardless. When I know that there is the existence of the smaller candle dominance, when I have a cluster, and when there's a barrier. If I see that 4, 5, 6, I'm clicking in. If I see 5, 6, I'm clicking in. Again, with the existence of RCB. So that's the difference. But if I see 7, there's no need to click in. Because in order for me to get filled, I know that it has to come down. It would have to go 7, 7, 6, 5, 4. I don't want to get filled off the market moving backwards. I want to see the market in range 4, 5, 6, as an example. 3, 4, 5, 6. That. I want to see the market moving away from the strike. This is good. That was a good example to use. If there's no pricing and you're 5 or 6 away, could we call? Well, yeah, that's definitely stability. If you don't see pricing, it doesn't mean that there's not going to be pricing available. Remember that the platform does not always show all of the orders. That's why you have to use the protocol. Don't concern yourself with whether there's pricing or not. Concern yourself with whether you're in range or not. Concern yourself with whether there's RCB or not. Am I making sense? Don't try to do the job of the platform. Let the platform do its job. The platform is designed to match orders. So if you place your order and there's someone on the opposite side, even if you don't see the pricing, you could be filled on the trade. So your job is just to apply the process, just to apply the protocol. That's it. But the protocol is not clicking in when you got 7 micropips away. That's not the protocol because it's out of range. Am I making sense? This is a good discussion because this will help to clarify the way that you guys are seeing things when you're in phase 3. So you might have thought, oh, well, you know, it's 8 micropips away and there's RCB. Yeah, I should click in. No, you shouldn't click in. Why would you click in with 8 micropips? You know that there's no possibility of you being filled because in order to get filled, it would have to go against your strike. It have to go from 8 down to 4 or 3. Do you want to be in a trade where the candle is turning the opposite color, coming towards your strike? No. Make sense? So you want to see the market positioned in range. And this is why you need patience. Yeah, and see, you'll remember this conversation now that I'm having because this pertains directly to what you sent me. That example you sent me, you see what I wrote, right? As soon as you send it to me, matter of fact, let me read what I wrote, just so that everyone can hear my response immediately. I said that there was clustering present, Barry as well. From what I see, the range definitely in place. But when you see that there's no pricing and you don't get the +1 right away, you can just leave it. Don't bother clicking in. So what am I saying there? In other words, if you got 5 and you didn't get the +1 yet until 20 seconds left, there's no need to click in. Am I making sense? That's the perfect response because that's specific to what you'll see. You're like, all right, I got 5, but I ain't get the +1 yet. All right, so don't click in. All right, it's 15 seconds left. Should I click in? Nope. For what? We don't have to chase the trade. This is the point that I'm making. But now if you're in range and you get 4, 5, 6 and you got 40 seconds left, I'm clicking in. You're clicking in because that makes sense. But if it's already at 6, it's already at 7, what are we clicking in for? We're not clicking in when we know that we're not going to be filled. And we know that we're not going to be filled when we're out of range. On the other hand, when we're in range, we click in without thinking about it because we know that we're applying the process. And that right there is what gives us the confidence to click in. It's like, well, I'm clicking in whether I get filled or not. But that only applies when we know that RCB is present, when we know that we're in range, and the market is actually in position. And then we get the +1. This is good. Very good. Mic drop. Yes, indeed. Yeah, and I know that I've said it a lot of times. But you see how crazy it is that I say the same things over and over again, but it don't click until whenever it clicks for you? Ain't that crazy? I always find that amazing. Like I said this shit 3 years ago. I might have said it last year again, but it didn't click until this year. That shit is crazy to me, but it is what it is. It's because of how we're built. See, we don't see like information. There's so much information around us all the time. You don't absorb and retain a lot of it. A lot of it is just floating past your head. You hear it, but it's not staying there. You know what I'm saying? And then one day it just stays there. And you're like, oh shit. He been said that. Yep. Exactly. But it's all good. This is why we train. This is why the repetition of training is so important. Because you don't know the day or the hour that it's gonna come. You don't know that when that light bulb comes on. And of course, this part too. Yep. Just hard-headed by nature. Yes, that as you should be. As you should be. Yeah, but this was very, very good. And I know that this is going to help a lot of you. Absolutely. All right, man. I'm about to go to bed, man. These allergies is kicking my ass a little bit. Damn. All right, y'all. So this is live market observation number 67. In the bag. I'll see y'all on the next whatever. Coffee and charts, next live market observation or whatever I'm doing. All right. Some good stuff coming. I have a video that I'm actually working on. I'm gonna introduce something that I've been talking about since the beginning of the year. I will be actually putting that out this month, I believe. So y'all stay tuned for that. And other than that, y'all know what it is. Look, he know which one it was. He said coffee and charge 17. Wow, I like that. I like that. All right, y'all. Buenas noches. Mark Fuller, TeamAlliance. Love, peace, and soul. You know what it is. Dom de Marco. Dom de Marco.